Okay.
And you'll be able to edit all this stuff and chop
Yeah.
it up and stuff, right?
Yeah. So if you need to stop and do something, again, we can do that. Okay.
Yeah. And if you think, if I've gone too fast or stumbled and you want me to redo it, just let me know.
Yeah. Yeah. So so tell me about your background.
Well, thanks, John. Yeah. First off, thanks for having me today. It's really cool and an honor for me to be a part of your newsletter and the JLN, network and universe, Markets Wiki, and all that. So 2 weeks after I graduated from Marquette in 2004, I started on the floor of the CME in the Eurodollar front month Eurodollar pit, which back then was still it was the longest pit in the world, and it was jam packed. Electronic trading had started, but it hadn't taken over completely. So a very good family friend of mine, Chris McNulty, gave me a shot to start out as a runner for them, his small prop firm called Trinity Capital Markets. So did about 6 months as a runner on the floor, and all the wonderful experiences that come with being a runner on the floor. But just an invaluable experience that I'll always be grateful for, especially considering that it's over. So after that, I went and actually traded for Chris's firm for about 4.5 years. Mostly traded Eurodollars, treasuries, and financial stuff like that. The meltdown of 08, 09 sort of ended my trading career, and probably several others. And so I hooked on actually working for the exchange in the beginning of 2010, and I worked for CME for 11 years. So my entire professional career has been in the financial Chicago commodity futures and derivatives markets. And having said that, your newsletter and your markets universe is an institution that this is really cool for me to be a part of. Wanted to say that I especially think the work that you've done in creating the pieces about the history of trading in Chicago and Chicago's role as being the epicenter and creator of commodity futures is really cool. I think it's important, and I love that stuff. It's also, I think, invaluable how you have put together some of those forums to talk about the industry and how the next generation kids and people that are coming up can get into this industry, which I got to imagine is a little bit harder now without the floor being around. That's where I got my start. And so again, just thanks. This is really cool.
So tell me about Stable. What is Stable?
Sure. So Stable is a newer company. What we're doing is we're changing the way that the world manages volatile commodity markets and commodity price risk. And so, probably most of your viewers and readers, when they think of commodity risk management, they think, immediately of corn futures at the Board of Trade, or lean hog futures at the Merc. And what I would bet most people don't realize is that those legacy benchmark futures contracts, right? They only are a part of 8% of the world's commodities that are actually listed for trade on an exchange. So on CME, ICE, EEX, NZX, and the likes. So 92% of the world's commodities are not listed on an exchange, and you cannot trade them. You can't directly hedge them. And what's even more astounding is that in a dollar notional value, that's over $8 trillion worth of risk. And so, as we've seen, particularly over the last 1.5 to 2 years, the agri-food and farming and commodity industries are experiencing some of the highest price volatility of all time. And so, Stable, we're perfectly positioned to help businesses navigate through this challenging time and even normal times, right? So what we do is we've created and are implementing custom tailored risk management products that settle to an index. And so we have presently over 5,000 commodity indexes. And then our products, they function very similarly to call spreads or put spreads. In the way that we do it is, so we have our indexes, and then our data science team applies actuarial modeling and statistical analysis to calculate a premium associated with that call or put spread that will then settle to the specific commodity index that a customer requests. And then the best part is that once you pay the premium and you're locked into the index that you want and the coverage period that you want, that's it. There's no margin management. It is just, when you think about it, like your home insurance or your car insurance, it locks you in, you're done. So it's very simple, and it's a direct hedge, and it's very effective. And it eliminates basis risk, which is most important.
What is the history behind Stable?
So, as I said, it's a newer company. It was started in 2016 by a guy named Richard Council. He's the founder and CEO of Stable. Richard is an experienced technology entrepreneur. He's a former trader, and he's the son of a farmer. And so Richard was inspired to build a team and a platform that could redefine the way that the $8 trillion commodity industry not only manages financial risk, but also how they understand it, right? So Rich, he saw firsthand the difficulties in managing risk of commodities from his experiences on his family's farm.
Okay. So how does Stable create the products?
So Stable, it does it, it's different, but it's simple. So what's unique about Stable is that it all starts with data. Like so many things now, data is a commodity in its own right. But so we're very spoiled here in the U.S. We have the USDA, and the USDA publishes thousands of prices for different commodities across the whole spectrum. And so USDA is a great example in that if there is a published data set for a commodity that is, again, publicly available or available via some other method, we will work to onboard the data. And then we can run it through, our processes to ensure that it's robust and that we have enough, a long enough sample. And from there, we work with our reinsurance partners to write price insurance policies that are based on those indexes. And so in addition to USDA, which again, we're lucky to have here in the US, globally and in Europe and in other spots where they don't have USDA, we have partnered already with over 50 global price reporting agencies. Some of them you might recognize, like Urner Barry, Fast Markets, Mintech, Mercaris, places like that. And so what's cool is that, as commodities become more, more valuable or different and changing, people are finding new ways to gather that data and present it in a new way. And so we're always open to look at it from a different angle and onboard a new index and go from there. Because the indexes are the bedrock of our policies and our products.
What is the process and what differentiates it from listed derivatives and OTC swaps? Okay,
so previous to Stable, if you were trying to manage the risk associated with a commodity that wasn't listed on CME, you didn't have very good options. Number one, you probably would look to self-insure using your own balance sheet. Or you would run some regression analysis in an attempt to find a similar product or commodity that was correlated to yours. The problems in that with cross hedging is that, it's not always effective. You have to be vigilant in monitoring what the basis is between your commodity and the one that you're using to hedge. And then you also have to maintain the margin, right? So as the market moves and your position changes, you have to put in more money to make sure you can keep the position on. And then, thinking about that basis, basis relationships, they shift and they're not always reliable. And so when those things disconnect, what you put on as a hedge to manage your risk could actually end up costing you a lot more money. So a really good example of this is one that we saw, in the height of COVID last year, right? So if someone doesn't really understand it to the level that we do about commodities and hedging, they would think, okay, the prices of beef and the prices of cattle should be, moving in the same direction. They should be relatively correlated. And at a high level, if you look at like 10 years worth of price, price regression, the correlation between like CME live cattle futures and USDA choice beef, it's okay. It's about 70%-ish. However, if you were, let's say you were using live cattle futures to hedge some sort of beef exposure that you had last year, it was horrific. Simply because when you have the animals, the steers, and then the beef. In between those, you have the processing facilities that create the beef, right? And so COVID, severely limited the ability to process beef, and shut down plants at certain times, and so you had the prices for the animals are going straight down, and the prices for the meat going straight up. So the short-term correlation between live cattle futures and USDA choice beef over the last 2 years is actually negatively correlated. So negative 37% correlation. So simply put, prices that generally move in the same direction, they don't always move in the same direction, right? And when things get turned upside down, it's really bad. And so it further underscores the need to have a true direct hedge. And with stable, you can choose an index that is custom constructed to exactly what you're looking at. So if there's a certain cut of beef on the USDA report, stable will write a price insurance policy that is settled to that cut of beef from that report. So again, you eliminate basis risk. It's a direct hedge. It's an effective hedge that you have custom tailored. And again, you just pay the premium and then you're set. No more dirty hedges, no more moving money around to manage the margin.
Let's try that again. Who are the target audience for your products and services, and how large is the potential market?
So right now, John, our clients, customers range from, actually, John, can we start? We'll start that one over because I was told to not use the word clients and I didn't take it out. So let's start it over.
Yeah, go ahead. So, who's the target audience for your products and services, and how large is the potential market?
Yeah, so our current customers, range from global food businesses, wholesale suppliers, processors, restaurant chains, farming cooperatives, and local farming organizations. And that's just our current mix. As we mentioned earlier, the estimated market of unlisted global commodities is roughly $8 trillion. So we've only begun to scratch the surface on who our audience is, and it continues to grow.
Okay. And then what are some of the examples of current stable product offerings?
Yeah, so far this year, and we've only begun actually executing these risk management policies as of January of this year. And so far, we've written and implemented price protection policies on commodities like avocados, organic corn, tallow, pork bellies that are used to make everyone's favorite bacon, ham, and then whey protein concentrate, just to name a few. Avocados is a really, really good one, because if you think about how much guacamole we eat now, and just how ubiquitous avocados have become in just the last 20 years. And yet there's no avocado futures contract. There's no avocado anything. So Stable has stepped in, and we've managed avocado risk now for several companies. And I imagine we will really continue to do a lot more business on avocados.
I love it. So what's your role at Stable?
Yeah, so I joined Stable USA in June of this year as the U.S. Commercial Director. My role is focused, at a high level on growing the business here in the U.S. So Richard started Stable in London, and we're now just beginning to ramp up our efforts here in the U.S. So I work closely with my colleagues on our research, our data science, and our sales teams to, finely tune our product strategy. And, so far we've been very focused on the protein markets, dairy markets. But again, we've seen interest in packaging, plastics, just to give you an idea of how broad our scope is. So, most importantly, though, I'm also responsible for securing the partnerships with businesses that'll benefit from not just our product offerings, but also the global commodity platform that we're creating. So in order to support, our revolutionary products, we are building a platform, or a customer-facing platform that will house, all of our indexes and the data and the analysis that you can run on them. And then, some custom tailored content that supports and guides the whole risk management process, from coming on board to find something that works for you, to reading some news that is, is about avocados, right? And then all the way to the point that you then execute your policy here with Stable. It's going to be like a whole universe of global commodities information all in one place. We're pretty excited about it.
Okay. And then what led you to join Stable in the first place?
Yeah, so I was a trader for 5 years, worked at the exchange for 11 years. I don't know anything else other than commodity markets. And so, I learned a great deal over that time frame in various roles. And one of the things that stuck out particularly to me was just how difficult it is not just to manage risk, but to create new exchange listed derivative contracts, especially in these smaller niche commodities, because they're constantly evolving.
Hey Jim, let's start this one over.
Sure.
There's a little bit of a delay, and we got a little bit of blah 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 kind of video audio. So let's start. Sure. The question: what led you to join Stable?
Yeah, so my career began, as a trader for 5 years. Then I worked for the exchange for 11 years. And so my entire professional career has been tied to commodity futures and markets. So I learned a great deal in that time in several roles. And one of the things that sticks out that I think led me to where I am now is just truly how difficult it is to create and list successful exchange listed derivatives, right? Especially in these smaller niche commodity markets. They're constantly evolving. The trade can be sporadic. And so from a two-sided futures market, it's exceptionally difficult. And so that frustrated me because, along the way, I've met so many people and companies and entities that have real price risk, and they don't have great tools all the time to manage it. And so when Rich Counsel contacted me and we started talking earlier this year, it was like a light bulb went off. You know, Stable's creating these revolutionary products at a time that they've probably never been needed more. And then my background, you know, with the exchange, working as the director of research and product development for agricultural futures for CME, you know, it all came together. It just made me realize rather quickly that this is an opportunity that I had to be a part of.
All right. And then lastly, all right, let's see. Well, no, not lastly. Where are the Stable offices located?
So we have an office here in Chicago with me. We also in the US, we have a New York office, a Minneapolis office, and one in Austin, Texas. Then in Europe, we have London is where Rich, our CEO, and a large portion of our group sits. We also have an office in Amsterdam. And then lastly, we have an office in Bermuda.
All right. And then how can people partner with Stable?
Sure. Yeah, there's three main avenues to becoming a partner with Stable outside of, you know, actually transacting and using one of our products. As I mentioned before, that our commodity platform is very important to us, and so you can partner with us in one or all of the three ways, right? You can be an index data provider. You can also be a content provider, and or you can be a service provider. You know, the first one is pretty obviously important to us, as data is the backbone of all of our indexes. And as more data sets become available from hundreds of global price reporting agencies, the possibilities for new custom tailored risk management solutions are truly endless for us, especially as we can bundle several different commodities together in different ways to create, you know, really unique strategies for people. And then the other two ways are very important as well. Like we talked about before, when someone comes to the Stable universe looking for information on pork, you know, they're going to want to see news and services that are directly related to pork. And so we're really excited to partner with people that can provide us that third-party content and services to create this whole universe for us. So a lot of exciting stuff going on, what we're building, and you know, the future of commodity risk management, not just in the U.S. but in the world, I think is bright. And you know, I'm happy to be a part of it, and I'm also very thankful to be a part of this with you. So really, thank you for having me, John. This is awesome.
All right, that's great. So I'm going to stop the recording.